Friday, July 25th, market analysis of Stan Ehrlich, 1:34 California time, end of the week, and we have only 1 week left to July. So, this is going to sound a little bit like a broken record, at least for the stock indexes, because there's not much change. We are still overbought, climbed a little, similar to most of the statements I've been making the last 2 or 3 weeks. We are a new historic high ground, but the danger is overbought conditions usually lead relatively soon to a downside correction. So I would not advise getting into any new longs. And if you are long, I do advise that you be very careful, pull your stops up, protective stops, consider taking profits, etc. The RSI at 83 ballpark is where it topped out slightly once before, is where it topped out significantly once before, is where higher than where it started a longer-term bear move before. Basically, every time, almost every time, we get above this threshold of 75 for this custom RSI, you end up relatively soon. It may take a week or two. In this case, it's been 3 days. Sometimes it only takes 1 single day for the market to have a downside correction. But as you can see, the same thing happens with the bottoms. The oversold conditions lead to a big rally, lead to a rally, led to a rally, started a rally, started a rally. Nope, that one didn't work. Started a huge rally. And we haven't been oversold since the early part of April. Pretty darn strong move upward in general. Makes me a little bit concerned, to be honest with you. 1 minute chart not showing us much of anything. Same kind of comment for the S&P 500. Looking for the beginning. I hope we have a bearish engulfing ER red sell signal. Beginning of a down move. Spider, 1 minute. Nothing here. QQQ, same thing. Overbought, looking for a move down. In some cases, we've got gaps to close. There's no particular great support area close by. It would be easy for this market, these indexes in a general sense, to come down fairly significantly. And I'm talking about back basically to the highs we had approximately November, December, January, February, which in this case would be 540. Pretty good swing, 26 points. Next, QQQ, 1 minute, dropped off a bit at the end of the day. And the NASDAQ, same thing. New highs, overbought, looks super bullish. Don't be fooled by a bull trend. They don't last forever. So, 1 minute chart. YM. Possible little double top. Don't have any signals. Could make new highs. Not overbought. I have to wait for a signal. The 1 minute chart is not particularly important at this point. The Russell did make a new high a couple of days ago, but also a possible little double top. They're small. The downside objectives, if they work, are not that big a deal. In fact, probably enough to bring other indexes back to the November, December, January, February highs. Slipping off very slightly. And the 1 minute. Now we're going to go to bonds. Nice rally in bonds. This could be a little tiny head and shoulder bottom as part of the bigger pattern. You've heard me talk about this before if you've been following me for the 2.5 years that I've been doing this daily YouTube, except on vacation or maybe I got sick or something. So I'm going to put a little bit of another marker in here. So I want to make this a lot smaller, of course, something like a couple of days worth. But that could be the first shoulder, and this could very well be the second and last shoulder. There we go. And the neckline is going to be, whoops, right here. But this is a pretty small pattern, but we don't need anything gigantic. This could be the last low when we were oversold, testing support levels and trend lines on July 16th. So if we break this line, the minimum upside objective should be just about enough to break out of the bigger pattern. And here we go. Let's measure this upside objective. Let's say it's going to be the middle of next week. Sure enough, easily, all we have to do is break that line, and we'll be breaking above the neckline of a head and shoulder bottom of some significance, fairly normal size, from April, May, June, July, 4 months, about 3.5, normal size. And that pattern has an upside objective of 122 plus. So, interesting. Maybe a small head and shoulder bottom as the last shoulder of a larger head and shoulder bottom. Not unheard of, but not super common. We also have a similar pattern developing for the last month or so in the 10-year notes. Now, this shoulder, head and shoulder, has almost an exact flat net line. It just slants upward extremely slightly, but it is also big enough vertically to push us up to probably an upside breakout. I'm just going to give you a quick ballpark measurement here. So the neckline would be right about there. That's good. And then you take the measuring stick and you give it a breakout about there. Sure enough, the upside objective is enough to bring it into new high ground, and I will outline that formation next week. Bearish engulfing crude oil today, outside down day, probably going to start a breakdown to the support area, which was going to be back to about 62.90 and a bit lower. And we're looking at new lows in the last couple of days on natural gas. It did break out of my head and shoulder top way back on June 26th. Had a little glitch for one day, closing at or above the neckline, well above the neckline. Is not supposed to happen. It did it, but it corrected the problem immediately the next day, June 30th. Since then, downside move, new lows completely. Got oversold, bounced out of support, came back toward the neckline. Normally approximate 50% correction from the lowest low, downside progress toward wherever the neckline is at the time. This came back up, it looks like 60, 65%, maybe 70. And we've got new lows. Got oversold, though, Wednesday. Flat on no progress one way or the other yesterday, and bounced a little bit today. But now we've got a little resistance above the market. I think we're going to make new lows next week easily. I'm looking for 1.1. Heating oil, bearish engulfing yesterday, came down more today. Looking for a close very soon below yesterday's lows. Looking for a test of support at 2.3. Probably not going to hold. Probably going to come down to 2.23. And I think there's a good chance it could come all the way back to a major support area at 2.09. And I'll pull this over to the right a little bit. Yep, that's good enough. Right about there. Next, we've got a bearish engulfing a couple of days ago. Now, the rally we had here is not totally unexpected. Some of you people might remember ER3 predicts the 40% likely of it coming back into approximately the middle of the range of the reversal day within 3 days. This is 2 days later, and it did come back in the middle of the range of Wednesday. So I can expect it to turn around and head into new low ground completely. My fail-safe stop is always a tick above the high of the reversal day at the very highest. So the risk isn't too large here, in my opinion. Next. Overbought started a big break, no surprise. Silver, probably come off a bit more. So what was this, gold? Sure, okay. Gold got to up resistance and that retracement. Okay, silver again, coming down. All right, I actually mentioned the fact that the gold reversal might help silver work lower. Next is copper. Platinum. Minor new low, coming down pretty good. But all we got here is really a little bit of a bull trend line broken. Minor amount of support didn't hold, but that's minor. I think it's quite possible it could drop somewhere between 1350 to a support area around 13 flat and maybe a little bit lower. But I got no signals. I got no overbought. All I got is a market that's turned around and started to slip a bit. Still a bull trend. There's nothing super bearish about this. It's just trying to figure out how much of a short-term downside correction we're going to get. Overbought conditions in copper should start it to back up more than just today. I mentioned yesterday a new high for the trend up and a lower close is not particularly friendly. Now, it did close a little higher today, but after it made lower lows significantly than yesterday, I think I should be a little bit bearish short term. Still bullish longer term. Grain. Beans came off a little bit. You know I'm trying to support a long-term bull move. I can't seem to do it at all in soybean meal and wheat. But beans have some chances. Major low back in December. A little bit higher low in April. And a much higher low this month, July. So we have to hold the July lows. I think we will. And we have to start closing above 1043 to perpetuate the longer-term bull move. Otherwise, I haven't got anything to work with here. Just dipping down just slightly at the moment. We've got a little bit more strength in soybean oil. This is great because this pattern is working great. The original upside breakout was a classic upside breakout on June 16th. An up gap across the neckline, that line right there. That line right there. So, I like what I see. I've got no problem with this whatsoever. The minimum upside objective is 62.62. We have a slightly higher high for a few days, but a slightly lower close. No big deal. We're not overbought, although fairly close. We could back up a little bit without hurting the overall pattern. But I do expect soon, and it could be as quickly as Monday, or within the next week, or even a little bit more than that. A new high, complete for the trend. Getting up into this resistance, and then maybe we'll get overbought. Next chart is soybean meal, lower again today. I swear, I don't know how low is low except for zero. And some of you old timers might remember, I think it was either crude oil or natural gas. I really doubt it was crude, but there's a possibility. It got below zero. It literally did for about a few days and then went screaming back up. Wild. Never seen that in the 53 years I've been in this business. Approximately 35 as a broker, president of a forex firm, 5 different market letters, lecturing around the world for 20, 30 years, blah, blah. I've never seen anything do that, and it did happen once. A commodity price got under zero. Enough of that. Soybean meal, probably going to make new lows. Next, corn. All I can do is say there's a gap at higher levels of 417 to close. I think that gap is going to be closed. I don't see a turnaround yet. I've got to think sideways to lower until I see some evidence it's going to rally some more. Nothing here. Neutral to bearish. Even though there's a gap to close, which I totally expect, it's not trying to do it yet. Support is trying desperately to hold in wheat. I don't think so. All of these highs, intermediate, short-term, longer-term, are basically lower than each other with one exception. Lows are lower, trying to hold here since May. Frankly, I think we're in for another sharp, big leg down. Oh, I don't know, probably down to 500. Yeah, wouldn't be surprised. Shell, little dip. Almost finished closing the gap I've been talking about for a couple of days. Didn't quite do the job completely. I think it's going to come down a little bit more and close the gap. Then we'll see what happens. Trend is obviously up, but we're getting stuck in a sideways. And the high of the sideways was a bearish ER sell signal. which is still in force because we haven't gotten above that high. There's a good chance we could start breaking recent lows, and that would cause me to be a bit more bearish for a little while longer. I can't be terribly bearish. We had a buy signal on the bottom on April 9th. Great. Intermediate to longer term, I'm bullish, but a question mark about what's going to happen here in the next few days, except for the gap closure. So we have a little bit of a nothing day for Apple. A little bit of strength, but nothing new. Resistance for 5 days in a row now is stopping it. Also, the bearish engulfing is the highest high for the last month or two or three. Two. I think we're going to have another downside correction. Hasn't started yet. At least resistance is stopping it so far, but I don't have the lower lows and the lower closes. Tesla came right back up today, almost closing the gap I outlined yesterday for you. We need a little bit more strength up to about 2890-ish, 328.90. We're still in this pennant formation. Bounced off the bottom yesterday, got stronger today. That's the main feature right now is the pennant, the gap also. So I'll just drag the top of the pennant to the right a little bit more and the bottom a little bit more to the right. And that's about good. Next is NVIDIA. Another new historic high by Squeak. Looks good. It did already exactly what I'm thinking. Well, what was it? Yeah, Shell's going to do. Finish going down, close the gap, turn around and go back up again, maybe. That's exactly what we did with NVIDIA. Turned around, closed the gap, made a new high. Trend is still strong. I'll take this little skinny trend line and extend it up a little bit more. Next, we're back to the E-mini. You guys have a great weekend and profitable trading to you.